Natural gas futures spent the majority of Tuesday's trading session firmly in the red before a late rally sent the April gas futures contract 6 cents higher day to $2.79. Though weather demand is expected to be light for the remainder of the week, the longer-range models show cold air over the northern plains spreading south and eastward late this week. Overnight temperatures could dip close to zero in some areas, with chilly air likely penetrating deep into Texas and portions of the south. At the same time, the key south-central region sits at very high storage levels. This becomes problematic if the upcoming pattern fails to deliver any notable chill into the southern United States. The potential for a chilly end to the official winter season for the natural gas market is lending some support overall to prices. After briefly slipping below $2.30 last week, analysts said a return to $3 gas is not out of the question. Freeport LNG also continues to ramp up operations. The liquefied natural gas export terminal this week asked federal regulators for approval to begin commercial operations from Train 1. Train 2 also is in the process of restarting after the Federal Energy Regulatory Commission granted those approvals last week. Train 3 has been safely restarted and is in full commercial operations producing LNG. Once fully operational, Freeport would produce 2.38 billion cubic feet per day of liquefied natural gas at its facility on the upper Texas coast. On the supply side, the lower price environment also is prompting producers to adjust their production profiles for the year. For example, Comstock Resources said it would lay down 2 rigs from its Haynesville shale drilling program. Chesapeake Energy also plans to drop 2 rigs in the Haynesville, one by the end of March and another rig in the third quarter. Southwestern Energy guided to running 10 to 11 rigs between its Haynesville and Marcellus acreage, down from 13 total rigs in 2022. Typically, the first leg up from a major bottom is fueled by short covering. The real buyers come in on a pullback of the first leg as they attempt to form a support base. Without a solid support base, a market could fail, so we are looking for a near-term retreat into at least $2.50. If this area attracts buyers, then a secondary higher bottom will form, and that would be a strong sign of real buying.